What in the world is going on with Carvana stock? I have pulled up here the one-day chart of Carvana's stock price today on June 8th, and it's up a whopping 56%. So what caused this surge in the stock price, and is that surge justified? That's what I'm going to be discussing in this brief video. So let's get right into it. Carvana issued a press release on June 8th highlighting some changes in its second quarter outlook. The two big changes the company highlighted were an increase in the company's expected EBITDA, now expecting adjusted EBITDA above 50 million and total gross profit per vehicle above 6,000 in the second quarter of 2023. That was an improvement from the first quarter of 2023 and the outlook that was given in the first quarter of 2023 just a little over 1 month ago. So let's take a look at that. So in the first quarter of 2023, the company said that it expects to achieve positive adjusted EBITDA in the second quarter. So positive just means like it could be break even, it could be a little bit positive, and it's not really expected to be very robust in the second quarter, right? There's a chance it could also be negative when a company issues this kind of forecast. But when it says 50 million, that means that it's very likely to be positive in the second quarter. Also, it's probably going to be at least 25 million, right? They're not likely to miss that target by that much, especially when a month has already gone by from this previous outlook. So that gives investors a lot more confidence. It eliminates a lot of the worst case scenario. And now you're just thinking about could be 25 million, could be 50 million. The company could also do better than it expects over the 50 million. It could go to 60 or 75 million. So it's really good news for Carvana stock investors, and you can understand why the stock price was up. The next thing that was a big positive was the total gross profit per unit. And for me, when I'm looking at Carvana stock, this might be one of the most important metrics that I look at is the total gross profit per unit, because it tells me how good Carvana is at its core business. At its core, what Carvana does is buy and sell used cars. And that's measured in the total gross profit per unit. Buys used cars from customers and then sells it to other customers. That's the core of the business. That's what it needs to do really, really well in order to succeed in the long run. So this is the metric that I'm paying very close attention to all the time, every time Carvana comes up with an update. In the first quarter, it achieved a total gross profit per unit of $4,300, which was an increase of 52% compared to the first quarter of last year. But in this update, Carvana is saying in the second quarter, they expect to achieve a total gross profit per unit over $6,000 in the second quarter of 2023. So an even bigger increase than was in the first quarter of 2023. Again, really, really good news for Carvana stock investors. And good news is multiplied right now for Carvana stock because it's in such a difficult situation following the economic reopening. Carvana put itself in a bind because it purchased inventory at very high prices when used car prices were really, really high. And then growth slowed down, and then it had excess inventory. Those cars were not selling as high of prices that it thought, and so it's in a bind. People were even worried that Carvana might go into bankruptcy, might need to file for bankruptcy. That's how bad it got for Carvana. Now, it's far from that. It's made very good progress ever since those bad times. So, but still, every time Carvana has a really good quarter or a really good update, that further separates itself from the bankruptcy discussion, and so the stock price has a multiplier effect. Instead of just going up or down 5 or 10%, this stock moves up or down 25 or 50%, as you noticed in today's stock move. So it's highly volatile, and every time good news comes out, it's like a multiplier effect for Carvana stock. Now, in the long run, I don't suspect Carvana can sustain a gross profit per unit of $6,000. Think of that, right? Think of Carvana being able to buy a used car from a customer and then sell it for a $6,000 markup. That's unlikely in the days, in times when we have Facebook Marketplace and other ways that consumers can sell their own car and buy their own used car off of people just selling their car, posting the sticker on their car saying used car for sale, right? If it's going to be that much of a difference, people will go to their own route and buying their own cars. Now, there's a lot of risks to doing that, so there is a margin that Carvana can achieve in the long run. That margin, I would say, is closer to $3,000 or $4,000. But it's nice to get these few quarters where they earn above average rates of return to make up for those mismatches they experienced during the economic reopening. So all in all, really, really good news for Carvana stock here. A really, really good update. Although, does it justify a 50% stock price increase? Probably not. Probably not. But it does justify an increase of some magnitude, just not 50 something percent, right? That's investors getting a little too excited about this one data point here. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.